The U.S. economy unexpectedly lost 92,000 jobs last month, pushing unemployment up to 4.4%. And this report isn't landing in a vacuum right now. Investors are watching everything from gas prices, stock markets, a growing war overseas, all while trying to answer the same question. Is the economy slowing down or just catching its breath? Let's bring in Ted Thatcher, president of Bright Lake Wealth Management. Ted, good to see you. So unexpected loss of jobs here. What sectors saw the biggest job losses in this report? And then what does that tell us about where the economy may be heading?
You know, Alicia, really, there's a huge tug of war happening in the markets right now as the markets do digest everything going on in the Middle East and really how that affects consumers here back at home. While, like you said, looking at a jobs report this morning that did see an increase in the unemployment rate from 4.3% to 4.4%. We see the numbers, anytime you see a percentage change, that number change, it does spook the market, especially when you do see the kind of layoffs that were announced by companies like Block, Jack Dorsey laying off 40% of their tech firms, employees because of AI. And the last 2 weeks especially have had a lot of questions come around the durability of white collar work and even blue collar work being replaced by robotics and AI. And so that's the discussion the market seems to be having.
My goodness. Markets aren't just watching the jobs report today. They're watching, the war in Iran, what it could do to energy prices. I mean, gas is already pushing $5 a gallon here in California already for now. And with oil climbing and shipping routes disrupted, how real is the risk that this conflict could reignite inflation?
It's a really important question to ask. And the way I'm looking at this, Alicia, is really it's several fold. So, when we think about energy prices, that does affect Americans' pocketbooks, right? That's really the way that this war will affect Americans. For every $10 a barrel that oil increases, we effectively will see approximately a 20% increase in inflation. That looks like potential grocery bills going up. That looks like supplies and costs. So far, it really has been isolated to gasoline, at the pump. But if we do not see that Strait of Hormuz start to open and start to see that 20% of the world's oil starts to flow through there and 25% of the world's natural gas flow through there, that is the kind of discussion that Wall Street's going to be having, I would say, is having starting now and next week. The highlight, though, the positive thing that I will say here, you've seen the president come out and say that the Navy is looking at guiding ships through the Strait of Hormuz. And so the faster that kind of opening can occur, the quicker, we'll be able to move on from this specific energy discussion.
Interesting. So it'll be sort of like a concierge service for oil. Okay. All this uncertainty, AI disruption, foreign war, labor market that may be softening. Investors are just trying to figure out where the opportunity is. Where are you seeing it right now?
Again, I look at this through a couple different lenses. Year to date, we actually see a huge increase in some I'll say not exciting, maybe not sexy sectors. Materials, consumer staples, and energy have all performed really well. If you follow the money, that's where a lot of investors are seeking shelter. If you do look at the mega cap names, a lot of them are down. And there's been this narrative for the last year or so that normal people can't get access to some of these mega cap names because the valuations are so high. And so seeing a drawback there, I think actually does present a potential opportunity for investors as well.
All right, good info. Ted Thatcher, president of Bright Lake Wealth Management, thank you for helping us today.